Melissa Otto, 2015 has been great for Japanese stocks so far. A lot of that is due to the weakening yen. It's now around 120 to the dollar. Can it sink to 125 or 130? It's having a hard time getting lower than 120.
We think there's two things going on right now that are very important for the positioning of the yen. One is what the dollar is doing. If the dollar is going to continue to strengthen, clearly that's going to be great for yen weakening. But then there's also chatter in the market that the Bank of Japan may actually look to move again. And this would be a very powerful and could potentially create a very strong movement in the weakening of the yen. It really depends on what the Bank of Japan wants to do and how they want to position it. It's just simply chatter in the market right now, but it's something that we're watching very closely.
And that would be bullish for Japanese equities. But it's not all the yen. When you speak to a lot of Japan strategists, they say there's more going on, especially with regard to Japanese companies becoming more shareholder friendly, right?
That's correct. I think it's one of Prime Minister Abe's key growth initiatives in terms of his third arrow. He really wants to move forward and get Japan to utilize a lot of their cash. And I mean, in a deflationary economy, this is what's critical, is to just hold on to your cash. But now that he's trying to position the entire country to think about what it would be like to be in an inflationary economy, it means that he has to position them for growth. And growth really means that he has to improve the corporate governance and how the company invests and positions itself and utilizes its capital.
And one stock you like over there is Murata. They're a supplier to Apple. Tell me about that one.
Murata's a great company. It's just very well managed. They are a tremendous beneficiary from the weakening yen. They have a great relationship with all the smartphone manufacturers, in particular Apple. And we think they're positioned to be very competitive going forward.
And people look to the exporters when they think about Japan, but a weakening yen also means maybe more tourism, right? So which companies or sectors will really benefit from the increase of people actually visiting Japan?
Right. I mean, Japan has always traditionally been a very closed and extremely expensive place to visit, so it hasn't been terribly tourist friendly. But with the weakening of the yen, it's become much more affordable, and the relaxation of visas, it means that a lot of people that couldn't previously come to Japan can now. And it has created a surge in inbound tourism in the country. So companies like Oriental Land that manages the Tokyo Disneyland properties have seen a real influx of tourists. In addition, retailers like J-Front and Isetan that manage huge department stores in Tokyo have also seen a surge in duty-free shopping and also high-end luxury shopping, particularly by Chinese tourists.
All right. Well, thanks a lot, Melissa.
Thank you.
Thank you for watching The Street.